Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, oh yes, ladies and gentlemen, a market crash is occurring. Crypto crash is occurring. You know what's next, the real estate crash, because interest rates are going to go up. If you saw the last video, you would know what I'm talking about. And if you didn't, we're going to continue. You know the bottom is going to fall out when nobody's buying. That's right. Think about it, ladies and gentlemen. When the stop of money flowing in from loans, and people sit there and say, hey, you know what? I'm not going to buy anymore. We're going to find out where the bottom is. Nobody's willing to jump in. What's going to happen? Crash. The empire crumbles. And we're going to talk about it here shortly, ladies and gentlemen. And welcome. Stop struggling now. Gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back, ladies and gentlemen, to the Stop Struggling Now YouTube channel page for everybody here and on the podcast. So I want to just say, please share the videos, share the podcast, share the streams, because you never know who you can help. Now, let's get things in perspective, shall we, ladies and gentlemen, regarding a stock market crash. And there's a reason why one of the top funds will not buy the dip. They're not advising you to buy the dip. You should act like the billionaires, ladies and gentlemen. All right. But let me first, because a lot of people, there's misinformation. They don't understand. A stock market crash, as you can see here in this article, is a sudden and dramatic drop in the value of stocks listed on an exchange. See, they don't have a percentage in here. I tried to figure out what that means because they have a percentage for everything else. Stock market crash refers to a drop of 20%. Okay, we've been there. 70% of the stocks on the stock market have dropped more than 20% or more from a recent high. That's happened. A correction refers to a drop of 10%. Okay, so what do you call when there's 30, 40, 50% or 60%? You don't call that a crash, ladies and gentlemen. It is a crash. So you have to start thinking, because every time the bottom goes out of the stock market, you are told one thing and one thing only. Hell, even we talk about it here, dollar cost average. But when things are dropping 10% every other month, that is a problem, because you're going to dollar cost your average down to damn near zero if you continue with that. Look at what's happening with the crypto market. Dollar cost average only comes out to a certain point. After that, you have to say, hey, let this thing free fall. No sense in me keep dollar cost averaging. Why don't I just wait till we figure out where the bottom is? Because dropping every 10, 15, 20% every other day, that's not good. So we're talking about stocks. This could apply to crypto as well. As you guys all know, things are going to zero, it seems like. Now, here's what I wanted to show you also. Here's something very important about a stock market crash happened in 1929. Between 1929 and 1932, the composite price index fell by 86%, ladies and gentlemen. So remember that dollar cost averaging that you're taught about now? Again, we talk about it here, but when you start having these drops of 10%, like seemingly every month, every other week, sooner or later you have to go, hey, let me just sit on the sidelines right here with my duffel bag of cash, and we'll see where this goes. Because whether the stock is $50 a share, it drops to $30 a share. You can dollar cost, but then it drops to $20 a share. Now you're dollar costing again. Then it drops to 10 and you're dollar costing your way down. And the next thing you know, you're sitting there like using your bullets, which is the duffel bag of cash on the dollar cost down. And then the thing, it goes down to 7. And now you don't have any more bullets, any more cash to buy, because now it's at all-time lows. So why don't we just chill out, ladies and gentlemen, and sit back? The Federal Reserve, you guys know what they're doing. They're rolling back buying up debts of corporations and giving them money so they can buy back their shares of stock. So you know what that means. It's happening right now. That means stocks have to go down because they can't artificially inflate it. Now, I just wanted to go over the bear market again. You guys already know if stocks have fallen 20% or more, that's a bear market. So it's bear market right now, ladies and gentlemen. You guys know what time it is. And here it is right here. This is what I wanted to talk about. BlackRock isn't buying the dip as volatility climbs and sinking stock market. This is dated June 13, 2022. All three stock market benchmarks are falling sharply ahead of the Fed's policy meeting. They all know what the Fed's going to say. You know what they're going to say. They're going to have to increase interest rates. That means real estate's going to be in trouble as well, which now means there are real estate stocks and suppliers on the stock exchange as well. Those will be going down too, ladies and gentlemen. And not to mention lenders, banks, Wall Street are holding some of these notes from all these developers that are building those derivatives, and they can't pay them back potentially. That's a problem. You see how this is all working together, ladies and gentlemen, and don't think it's bad for you. It is bad for you if you have funds in a 401k or a pension fund or retirement fund. This could be bad, because we're going to talk about it. But if BlackRock is saying we're not buying the dip, then you should not be buying the dip. And by the way, SSN Nation members, here is what the VIX has done today. Almost 20%. In fact, I'm pretty sure if you checked out one of them, UVXY or VIXY or SQQ over the last 2 days, and if you count Friday and today, I'm pretty sure those have reached 20% increase. And as you guys know on the live streams, and you might have saw some videos, I hate to crow, but I am going to crow, because let's just call it what it is. You guys remember 3 weeks ago when I said, hey man, you guys might want to get some of that UVXY, VIXY, SQQ, start shorting the market. People were saying, oh, no, it's rising a little bit. No reason. Well, if you would have, then you would be somewhere around 30% in the positive about now. So I'm just letting you know. The party's not over yet, ladies and gentlemen. Everything is in place for a continued downslide. If the Federal Reserve continues with, we're not going to be bailing out companies and giving you these free money loans, then that means they can't buy back their shares of stock. So that means it's in free fall. People have lost their jobs. People are having a hard time economically. So they're not willing to buy on the dip because there is no stimulus money coming in. There is no beefed up unemployment money coming in. There's no money you can take from crypto because those are all L's right now. So now no money's going to be pumped into any of these markets, real estate included. So again, prepare yourselves. And that's why here in the SSN Nation, ladies and gentlemen, it is awfully nice that you're here, awfully nice that you share these videos, and it's awfully nice that you can always rewind and say, hey, this guy said this 6 months ago. He said this 4 months ago, 3 months ago, 2 years ago, and here we are. Now, it's your choice. You always have things that you can do in a bad economy. And remember, I always said before, and I'll say it again, you have to think of velocity shares. Bet against the market and take your profits, and things could get outrageous. I'm going to give you an example. This is only an example. You could have had a VIX velocity stock, a VIXY, UVXY, SQQ before in 2020 when the COVID situation occurred, and you could have received 200, 300, 400% on your money, depending on which one you're talking about, with only a matter of a few months. You could have taken your profit. At the time, they did allow TVIX, which they took off, where the stock was literally around $100 and it went up to an intraday high of around 900 ultimately. Talk about crazy. 1,000%, 900%, 800% on your money. That is pretty good. And in a short period of time, and here we are again, because if this market drops, if BlackRock isn't willing to buy. In fact, if you don't know who BlackRock is, let me start it out right here. BlackRock is the world's largest asset manager isn't wading into the sinking stock market to buy the dip. All right, they're the largest. If they're not doing billions of dollars,
BlackRock
now
isn't
you
buying the
understand
dip
what's
as
going to happen,
volatility
right?
climbs and sink.
So here we are, and I'm going to end this. This is going to be short and sweet because I want you guys to understand. Look at this. This is from Schwab on May 6th. Here's what they say. The average member's maximum decline from a 52-week high was negative 27%. Oh, I think that's a bear market. And after 20, I call it a crash. Here's negative 48%. That's a crash. Negative 47%. That's a crash. They're talking about S&P 500, NASDAQ, and Russell. And we haven't even begun to get to the bottom of this markets yet, ladies and gentlemen. This is just the start. After they blew up these bubbles for the last 13 years, well, somebody done popped it. And that's the Federal Reserve, because they don't have but two things in their playbook. So anyhow, stay tuned, and thank you so much for watching this video, because I wanted to get into something else, but we're going to make this short and sweet. So think about this. Make sure that you keep your eye on the prizes, the real estate, the stocks, because remember, starting your own business during a pandemic, because you're going to solve a problem. And therefore, I got to plug the SSN lifestyle, starting a business that solves a problem. People are going to need money. You're going to have to figure out where you can get that extra stream of revenue from. And so that's why I have to mention it. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and that's why you have to know this information, ladies and gentlemen, because then once you have the information, you have things that you can do to counteract. Make it a positive instead of a negative, especially when you know what's coming. And with all that said, keep your head up, keep moving, and I'm out.